Hi everyone, it's Matt Barnes here. I'm the lead trainer at Safety in the Market, and in this video I'm going to take a look at an historical case study where we'll explore what happened to the McDonald's share price when a potentially damaging documentary called Super Size Me was released. If you're not familiar with that documentary, I'll take you through what that was shortly, but I want to start with a quick look at the price chart of McDonald's in the lead up to that period. It's always important to go back and have a look at what's happened on a market previously. I know these days a lot of news channels or financial news reporting, they like to focus on what's happening right here, right now. And certainly that would have been the case back when the Super Size Me documentary was released. But you'll actually see that it's important to take into account what's already happened and what is happening in terms of the trend of the market. So you can see on this chart here that in November of 1999, McDonald's made a high of $49.56. And then over the next 3.5 years, it actually traveled down to $12.12 by March of 2003. So in around 3.5 years, McDonald's shares lost about 75% of their value. So there's a great example of why we don't just buy and hold shares. We like to identify the trend of the market and trade with that trend, and most importantly, use stop loss orders as well to protect our capital if we're wrong. Now, out of that March 2003 low, McDonald's actually recovered quite well and doubled in price, closing the year of 2003 at a price of $24.83. So looking at McDonald's, it had taken a fair bit of a beating in the preceding years, but the trend was clearly up in that early part of 2003 and running up for the rest of the year to that closing price of $24.83. So with that bit of background in mind, let's talk about the Super Size Me documentary. Here's a movie poster for when it came out. This is Super Size Me. It was a documentary by a gentleman named Morgan Spurlock. He's the one with all the French fries stuffed into his mouth on the poster there. And basically he decided he was going to conduct a science experiment, and he was going to see what happened to his body if he ate McDonald's every day, 3 times a day for 30 days. Okay. Now, as far as science experiments go, it's probably not the most earth-shattering of science experiments. I think everybody knew exactly what would happen. It's not like he was going to transform into a super fit athlete or go on to win the Mr. Universe contest after eating fast food for 90 consecutive meals. But for some reason, the movie really got a lot of traction and got a lot of attention and drew a lot of curiosity, and a lot of people went to see it, and it generated a lot of bad press for McDonald's. And basically, in my opinion, that's really what he set out to do. The whole thing was set up to make McDonald's look as bad as possible. He had some fairly dubious rules. For example, he had to try everything on the menu at least once during the 30 days. He would always supersize his meal if he was asked by a staff member. Now, if you're not sure what supersizing your meal is, it's basically going from a normal size meal to a massive meal by getting a huge serving of French fries and a 40-ounce or 1.25 liter cup of Coke as your drink. Now, that's an option designed for much larger, much hungrier people, but he decided he'd take that on when it was offered. So, these sorts of things, he's really not doing his health any favors. He's setting himself up to fail, basically, by increasing, vastly increasing the amount of food that he's eating, and also minimizing his exercise. So he said that during this period, he would limit his exercise to only 5,000 steps per day, which was the national average in the United States. So basically choosing to eat one kind of food only, fast food, and minimizing his exercise, it doesn't take a genius to work out what was going to happen next. He could have done the same experiment by going to Pizza Hut every day or Burger King or even the local fish and chip shop, and the result would have been the same. So as I said, basically the deck was pretty stacked against McDonald's in this case. The documentary was set up to make McDonald's look bad, and in my opinion, it did exactly that. Now, please don't think I'm trying to stick up for McDonald's here. They're a big corporation. They can stick up for themselves. But that's the background that we're dealing with here. That's what we're looking at. It wasn't a good look for McDonald's. For full disclosure, I actually saw the movie while I was on a date in 2004. I didn't get a follow-up date, funnily enough, but there you go. Probably not the best movie to take someone to for a first date. After the movie, I actually decided I was never going to eat McDonald's again, but that only lasted 6 months before I caved in because I was craving a quarter pounder. So there you go. There's my story. Back to the share price, though. I want to talk about the effect that the documentary had on McDonald's. There's this quote that's come out: no one eats McDonald's food 3 times a day, every day, and no one should. And another quote: we believe and have always believed that McDonald's can be eaten as part of a well-balanced diet. What Mr. Spurlock set out to do, which was double his daily calorie intake, deliberately not exercise and overeat, was totally irresponsible. These quotes came from Guy Russo, the chief executive of McDonald's Australia. So you can actually see that McDonald's took this documentary quite seriously, and they must have been in some sort of damage control, because I do remember at the time there were loads of ads and positive publicity that McDonald's were putting out to try and combat the effect of Supersize Me. All right, so there's all the background that I wanted to talk about. Let's bring it back to the share price. The movie was released in 2004. It had a staggered release over the year in different locations, different territories. But over the year, the documentary was coming out. Before the release, there was quite a bit of bad news and bad opinion about McDonald's because of that. While the movie was out, a lot of people went to see it. It was on the news. It was on talk shows. It was discussed quite a lot. And then even after it was out, there were still discussions and debates on this. You had people in the United States suing McDonald's, saying that eating McDonald's made them fat. All sorts of things. So not a great look for McDonald's. And people seem to have this idea, and it's quite a logical idea, but people seem to think that bad news for a brand is going to damage the brand and is going to damage the share price of the brand as well. So unless you are actually an employee of McDonald's, you might not be too concerned about it, but as a trader, you might be interested in how you can make money from this. So the first thought would be that you might jump into McDonald's and say, gee, all this bad news is really going to hurt McDonald's. I'm going to short sell McDonald's and make money from short selling. Now, if you're not sure what short selling is, that's when you sell shares or make money as a share price falls, even if you don't own those shares. And it's a little bit beyond the scope of what we're going to be discussing in this video, but if you're a safety in the market student, just flick to the appendix of your active trader program, the first book there, the Smarter Starter Pack, and you can learn about short selling there. Okay, as traders, we can jump in and have a look at selling this bad news, but as a trader, I would look at this chart and say, the trend on this chart is actually up at the moment. So that's interesting. You've got bad news approaching. There has been some bad news already, but the trend is actually up going into this year when Supersize Me was released. Let's take a look at what happened over the next year, over the next 12 months, okay? Over the next 12 months, the McDonald's share price actually rallied up to $32. So it actually gained about 30% in value during that time. So during that time, you've got a documentary release which basically concludes, rightly or wrongly, but it concludes based on the experiment that eating McDonald's is terrible for your health and that you shouldn't do it, and that if Morgan Spurlock had kept eating McDonald's, his doctors were telling him he would have died. Obviously, that's eating the fast food and no fruit and veg for a whole month, so that probably had a little bit to do with it as well. But really bad publicity. You're on talk shows. People are saying it's bad for you and needs to be healthy, and McDonald's is bad, but the share price has gone up. All right. If you look at what happened in the next year, in 2005, the share price rose again. A little bit of a sideways year, a little bit of a rocky year, but the share price still closed the year higher at $33.72. If we go 1 year forward again, McDonald's really started to take off and the share price rose to $44. All right. Now, obviously during this time, there's other factors at play. It's not just the Supersize Me documentary, but this is an example that a piece of bad news or even a whole chunk of bad news is not necessarily enough to turn a market chart down. In actual fact, you can trade off the news in this sense. You can pay attention to how a news announcement or a series of news announcements are affecting the share price of a company or even a commodity or a currency. You see how the news is affecting the price of whatever instrument you're trading. If bad news comes out and the price doesn't go down, that's one way of telling you that you're in an uptrend. Okay. Now, there are more scientific ways of determining whether you're in an uptrend, and we'll talk about those in a moment. But you can see there, basically the Supersize Me documentary had very little effect on McDonald's. McDonald's didn't just survive that period, it actually thrived. They made some business changes, obviously. They started adding in some healthier options. I was just chatting to Di before we filmed this video, and she was saying she was at McDonald's the other day eating a salad. And when I was a child growing up, not really an option at McDonald's. So there you go. They made some changes, but they thrived. So the point here, never underestimate the trend of the market. Pay attention to the trend. If you want to trade the news, that's fine, but make sure it's in conjunction with the trend of the market. If you want to short sell this market and make money as the market goes down on bad news, make sure the trend is down before you start doing that. All right. Now, if we fast forward to 2017, so the end of last year, as I'm recording this video, you can see that the McDonald's share price was up at $172. Okay. So very little has actually, very little of that bad news actually stuck, and probably most people don't even really remember what the Super Size Me documentary was. But I do remember it from the time, and not just because I was on a date when it happened. I do remember it at the time. It was a big story, and it was in the news for a long time at the time. But as you can see there, the trend is up. So what is the moral of the story? The moral of the story is don't fight the trend. The news for McDonald's was bad, but the trend of McDonald's was up. The McDonald's share price kept making higher tops and higher bottoms, which is how we define an uptrend. And the trend was up, and that's the way that the McDonald's share price went. A really good gauge of a long-term trend of a market is something that we call a quarterly swing chart. And the quarterly swing chart on McDonald's was up and didn't turn down until 2015. Okay, so there's an idea of just how strong that trend was. And trading against a trend is not a great idea. Trading against a really strong long-term trend, not a good idea either, unless you've got really good evidence for why that's going to happen. All right. So the lesson here: pay attention to the trend of the market. If bad news comes out and the stock doesn't go down, there's your clue that the trend of the market is actually up. And if you're looking for a more scientific way of working out the trend of the market, check out Safety in the Market's Active Trader program. You can view a short video on that on our channel here, a short 2-minute video to show you what that's all about. I hope you've enjoyed the video. If you haven't already subscribed to our channel, click on the red button below to subscribe and keep up to date with all of our latest videos. And if there's a case study or something from history, an event in the market that you'd like to hear us talk about or do a video on, drop us an email at info@safetyinthemarket.com.au with your suggestions. Thanks for watching, and I'll see you in the next video.